Good afternoon, everyone. In today's video, there's two things that I'll be talking about. The first is sharing an update inside of the utility labels indicator. This is a free indicator, and I've left a link to download the updated version in the description box below. This is what the utility labels looks like. It's a nice handy indicator that you can plot on your charts to get a very quick overview of the major markets and what market stage we're in each one of those markets. This boils down from the broader indices here all the way down to the sector level. Now, in terms of the update or the changes inside of the utility labels indicator, there's really two things that have changed. The first is the length. The length has been changed from 21 to 10 in order to try and account for the short-term volatility, and 10 is also our default length in the market pulse. So now everything there lines up, it matches, and we have slightly shorter-term bias to account for the volatility we're currently seeing. I'll show you where you can change this in case you'd like to tweak that on your own end. Now, step two in terms of what changed, which I think is the bigger change, is we now account for all four market stages instead of trying to just group stages into three groups. What I mean by that is, this is our old version where we had acceleration, so when the market's going up, we would have a green label. When the market was going down, we had a red label, but anytime we were in chop, whether it was accumulation or distribution, we just clumped that up into one yellow label. In the new change, I've split that up so that we have both orange and yellow labels based on if we're in accumulation, which again has a little bit more bullish bias associated with it, compared to distribution, which is more bearish bias associated with it. The red and the green labels remain the same. Again, you can download the updated version using the link in the description box below. We built the utility labels as part of the Market Pulse tutorial, so that's the link which will take you to the downloads. And once you get to that downloads page right here, just click this download button and that will give you both the Market Pulse and the utility labels indicators. Now with that, let me first switch to ThinkOrSwim here. So inside of our ThinkOrSwim platform, if I open up the utility labels code here first to show you where you can change some of these things. So scroll down, line number 20 is where you can change the length. It's set to 10, but in case you'd like to revert back to the default 21 that was in the code, this is where you could go ahead and change that. You can also change this to an input variable here, which will then allow you to change this from the studies menu. Now scrolling down, one other change that took place was around the market stages, which is inside of the add label code. Here, if you remember, we said we had red and green labels before. Now we've also added yellow and orange labels, splitting them up based off of how price is reacting to that VMA line that we're monitoring. So we've basically broken that out in a little bit more detail, and this is true for all of the different sectors and symbols that we have. So if I click apply, click OK, you can change the length now directly from the studies menu as well. Now let's dive into actually reading this indicator, which I think is the more useful piece of at least this video. Now before we do that, one thing to understand is the sector weighting inside of the SPY here. So if I show you two different resources, overall idea that I'd like to essentially draw attention to is we have information technology at the top, then we have healthcare, then we have consumer discretionary, and then we have financials. So for the S&P here, to go from yellow to green, we would need participation really from these four sectors. If we take a look to see what those sectors are currently telling us here, information technology we have with the Qs there, that's currently in a stage of accumulation, so yellow. Nothing is green here yet at the moment for all of our major sectors. If we take a look at healthcare, XLV here, XLV also in a stage of accumulation. So yellow, the fact that it's not orange, I think is a good sign, but we're still very much in this chop period sideways, if you will. Consumer discretionary, XLY, if we take a look at what that's like, very similar idea here. We're really still in chop, no real clarity there yet. And then finally, financials. Financials, we're very clearly still in a bearish zone here. Our label is red for XLF. There is the one place where we know we have bias to the downside. So for the four major sectors that we would really need participating, none of them so far are going green. They're not even showing up as looking like they might transition to green just yet. We don't see any green on any of the labels, any non-sectors related for these top four as well. So now if we use all of this information, in order for the S&P 500 here, if I actually switch to a chart of SPY, in order for the SPY market pulse to turn green, we would really need to see participation from those top four first. And at the moment, we don't see anything of that sort. In fact, if we sort of trace the move that we've been following inside of the S&P 500, when we had this rally right here, we were looking for a downside butterfly with no downside risk. We got that butterfly and we hit our target here. Once we hit the target, we fell into the 1272, and maybe actually the S&P futures illustrates this a bit better, but we fell into that 1272 extension, and as of this moment, we were looking for a slight little rally, filling this gap right here of 390. Now with Friday's move, we filled that gap, and the question is, what do we think is more likely to happen from this point? Do we think we go and maybe tag, say, the 1618 near 4153? Or do we think it's more likely that we say come right back down to that 1272 near 3730? Now, based off of what the sectors are telling us, to me, the fact that we're still very much in yellow for XLY, yellow for XLV, we're also seeing energy is now dipping into that orange territory, I would have a greater bias that we would be tagging the 1272 extension before seeing this strong bullish candle have continuation. To me, this looks more of an exhaustive sort of move as opposed to a continuation move, but of course price action will be the determining factor there. If we break, of course, above this candle, then we know what our upside target is, and we also know what we're looking for in terms of sectors to start rolling over to really get this bias that, hey, this is a longer relief rally maybe it lasts several weeks. Whatever that regard, these sectors can be your compass to essentially help you navigate that market condition at that time. So again, just to recap here, I'm looking for these labels to slowly start to go green if you expect that bullish move to continue, but as of right now, it's looking more like these labels are likely to revert back to the previous trend here with the S&P, the Qs for technology, XLY, XLF is already red, so we would need to see that shift to probably yellow in order for the SPY to get going. There's a lot of things that would need to happen, which as of the current moment, does not seem like we're anywhere close to that moment, if you will. So hopefully this helps to share why I'm still with my bearish cap on, looking for that downward 1272 to get retouched, or retagged rather. However, this Friday close candle I think is still a very strong candle, which does bring this question up as a question in the first place if you do think this rally continues. Hopefully the utility labels gives you some very clear signs that you can monitor and observe for that shift to actually be taking place so that you can jump into whichever index market you'd like based on what you're looking at. Alright, hope this video is helpful. Again, you can download the updated version of the utility labels using the link in the description box below. It's completely free. I think you only need an email in order to download that. Alright, take care everyone, good luck trading, and we'll see you in the next update.